In this video I'm going to describe how to use the free trading journal. So the trading journal is built in Excel, and effectively we've got 1, 2, 3, 4, 5 different tabs. The first tab is called Trades. Now this is the section that you use to record all your trades. The second tab shows a summary of those trades by trade status, whether they're open, closed or pending trades, and then we have a month-on-month analysis with an equity curve. This is where we insert the details of the instruments that we're trading, and then the last tab is a tab showing the expectancy of the trades that you're entering into the system. So we start effectively on the instrument tab. Now I'm just going to demonstrate how I use this for some intraday trading on the Dow. So the first thing that I do is I enter the position, the instrument that I'm interested in. So I enter the Dow in there. This price here is the current market price. Now this is only important if you're monitoring open positions, and it's really only applicable for end of day trading. Dow's currently trading around about there, so I'll leave that in there. So once I've done that, I'm ready to trade the Dow. I go back to the trades spreadsheet, and on here I start to enter the positions that I've taken on the Dow. So you can see here I've entered a trade that I placed an order on the 27th of Jan. I was filled on the 27th of Jan and I came out on the 27th of Jan. Typical day trade. The contract was the Dow. That position is closed. I went long, and my order type was a buy at the market. You can see the different order types in here. We've got buy at the market, a buy limit, a buy stop, sell at the market, sell limit and sell stop. This was a buy at the market, and the price that I went into the trade was 11920. My stop was 11900 and my profit target was 11950. Now this trade I used spread betting effectively, and I was risking £5 a point. And this trade came out at my profit target, which was 11950. So you can see that the P&L on this trade was 150 quid. Let's say, for example, let's look at that first trade in a bit more detail, and let's assume that I came out at 11940. I want you to take a look at this P&L figure here. You can see that that automatically changes dependent on the price which the position was closed at. So that's really the basics of entering a trade. Here, this figure here is the starting account. Now that's important to calculate your base equity at risk, so the risk per position, which is effectively the difference between your entry price and your stop as a percentage of your starting account. So let me just show you what I mean by that. I always try and risk less than 0.5% on an intraday trade. It helps me, this spreadsheet helps me to position size and also to understand a little bit more about the risk that I'm taking on each position. If my stop had been 11880, 20 points greater, you'll see that my base equity at risk will increase to nearly 1%. So I would have been risking 1% on this particular position. So let's drop that back to 11900. So that's the basics of entering a trade. You can see that I've got 2 closed positions and 1 open position, 2 long trades and 1 short trade. Now let's take a look at the summary sheet, which shows the positions that I've closed, the positions that are still open for this particular reporting period. 1 to 11 is January 2011, and these show the pending trades. So when I was using this to swing trade, I might have 4 or 5 pending positions. I might be going into the market using a limit order. This would show the details of those pending trades. In terms of what we're looking at here, we look here in the closed section. We can see that of the trades that have closed, both were winners. Well, two were winners. I had no losing trades. My percentage wins to losses was 100%. The average win size was 63. Obviously I've got no losses, so there's not applicable. Biggest winner was 100 quid. This section in here shows me the status of the last 5 trades. So I've had 2 consecutive winners. I use this to manage my portfolio level risk. So if I have 3 consecutive losers, I stop trading for the day. Here's the P&L on the closed position. So you can see that I've closed 125 quid with an average P&L per trade of £63. My ROI on my closed positions is 0.62%. So that's effectively my total P&L divided by my account size. And in here we've got some trading costs. At the bottom here we can see the cumulative risk reward on each of my trades. You can see that my risk reward ratio is 1 here. I'd like to be higher than that, but for the purposes of this example, that's really what that means. And then the same metrics are recorded for open positions. So let me close this trade, and let's close this at a loss. So this position here closed at a loss of £100. So if we go back to the summary sheet, we'll see that the last trade was a loser. I now have no open positions and 3 closed trades, 2 of which were winners, 1 of which was a losing trade. The average win size remains the same. The average loss size being 1 is £100. So we can see that my biggest winner was 100, my biggest loser is now 100. Closed P&L is now £25. Average profit per trade is £8 with a vastly reduced ROI. You can see that my risk reward, however, my risk reward ratio has gone up because the position that I closed had a more favourable risk reward ratio than the others. Let's take a quick look at that. You can see that my price in was 880 and the stop target was 30 points below the market, but my profit target was 60 points above the market. So although the trade was a loser, the risk reward on that trade would have been more favourable. If we have a quick look at the month on month, and this is really only applicable when we've got trades over some months. So why don't we do that? Why don't we quickly add some trades in? Let's assume that we've traded in February, and same parameters. We're in and out in a day. These dates obviously can be completely changed depending on when you entered the position, etc. It was a Dow trade. It's a closed position. It was a long trade. This one I went in using a limit order. The price of the market, the price that I went in was 11,900. My stop target on this long position was 11,850, so 50-point stop, and my profit target was 60 points. It was another spread bet. It was a £5 per point trade, and I closed this position just below my profit target for a £250 win. Quickly taking a look at the monthly P&L now, we see that for January my P&L was £25, which was a net ROI of 0.13, and my P&L for February is currently standing at £250. You can see here the end balance of the account, so you can see that I'm £275 up. This section here shows you a brief summary of the trades. You can see that in January I had 3 trades, 2 winners, 1 loser, win-loss ratio, costs. These 2 columns here are useful for end-of-day trading, where we can see the average time that we're in winners and losers. For intraday trading, it's not so applicable. For February, you can see that I've had 1 trade. It was a one winner. The ROI in that position was 1.26. So looking at my equity curve, you can see that in January my equity curve stood at just over 20,000 with that sort of £25 P&L. And then in February, you see my equity has gone up to 275. So that's how that particular sheet works. Let's enter a couple more trades, make this a little bit more meaningful. In fact, why don't we also trade a different instrument just to see how that works. Go back to the instrument sheet now. I don't know what the current price on the Nasdaq is. Current price on the S&P. Let's trade the S&P. So I type in S&P. This is a open position. It's a long open position. Again, this was a buy stop. So the price that I went in, let me just remind myself of the sort of price that I'm using in here. 1107. So the price here, I went in at 1107. My stop target was 1105. My profit target was 1110. This was a spread bet, and I was risking £30. Yeah, £30 a point. You can see. Let me have a quick look, see whether that's recorded. So there's an open position there. You can see that. Just quickly check what's going on here. Second of Feb, open position long. The current mark-to-market P&L is obviously flat because the price that it's using for that is this price. So it thinks the market's trading at 1107. I went in at 1107, therefore I'm flat. Let's say I close this trade out for a small loss. This trade is now closed. See, that was a £60 loser. So going back to the month on month, we can now see that my P&L for February has dropped to 190. I've now got a 50% win-loss ratio. So the last tab on here is really quite a useful tab. This is a tab called Expectancy. Expectancy is effectively, in my opinion, the most useful measure of a system's profitability. It doesn't just look at win-loss ratios, it doesn't just look at average profit or loss per trade, but it combines the two of them in order to deliver a value that this system is expected to make on each trade over a period of time. So with the system that I'm currently trading, or with the system that I'm currently demonstrating to you, I've placed 5 trades. This is my win-loss ratio, this is my average profit to loss ratio, so you can see that is well below 50%, which basically means that I'm losing more on each trade than I'm winning, but I'm winning more trades than I'm losing. So I have a positive expectancy for this system, although it's not fantastic. Now, in order to change these metrics, ideally a system needs to deliver as big a expectancy as possible. And this is something that over time you'll have to effectively design your system to do. But let me just demonstrate what would have happened if this last trade I'd closed. I closed at my profit target. See that now my expectancy had jumped from £11 to £73, purely and simply because my average profit to loss ratio, in terms of the average size of a win versus the average size of a loser, has now jumped up, as has my win-loss ratio. So if we traded this system 100 times a year, it would return us £7,300, which as a return on investment is somewhere in the region of 30 to 40%. So you can see that just by modelling 5 sample intraday trades with the £20,000 account, we can see that over the course of a year, if we were to trade the system 100 times, we would make £7,300, which is a return of between 30 and 40%. So there are the details of the trading journal. If anyone's got any questions, they've downloaded it, it doesn't work for them, or there are some features or functions that they think it would be useful to incorporate, please drop me an email. I'll put my email address up on the video, yeah, I'll do my utmost to improve it. It works very well intraday. It also works on the end of day trading, which is really how I designed it. We can trade using shares. We can also trade FX. As you can see here, FX including a pair that includes Japanese yen would use that particular drop down, and a pair that excludes Japanese yen, for example cable, would use this particular drop down option. So there it is, and yeah, any issues, questions or suggestions, please drop me an email. Thanks very much for listening.